The US dollar opened Monday's trading lower in Iraq, hovering around 154,000 dinars per $100, marking a noticeable shift in the country's currency market and drawing strong attention from traders, investors, business owners, and everyday citizens alike. According to a Shafaq News Market survey, the dollar traded in Baghdad's Al-Kifah and Al-Harithiya exchanges at 154,400 dinars per $100, down from the previous session's 157,000 dinars. This drop of 2,600 dinars per $100 within a single trading cycle reflects a meaningful movement in the Iraqi foreign exchange market, signaling a combination of policy influence, supply adjustments, and changing market sentiment. In the Iraqi capital, exchange shops sold the dollar at 155,000 dinars and bought it at 154,000 dinars, creating a trading spread that illustrates how local demand and liquidity conditions are shaping retail exchange activity. Meanwhile, in Erbil, selling prices stood at 154,150 dinars and buying prices at 154,050 dinars, suggesting relatively tighter spreads compared to Baghdad. These numbers may appear technical at first glance, but behind them lies a broader economic story that connects government policy, central bank measures, regional trade flows, and public confidence in the national currency. The decline from $157,000 dinars per $100 to 154,400 dinars at the main exchanges in Baghdad is not just a statistical adjustment. It reflects renewed stability efforts and potentially stronger intervention measures by monetary authorities. When the dollar weakens against the dinar in this manner, it often indicates improved supply in the market, possibly driven by enhanced dollar injections through official channels, tighter regulation of informal trading, or strengthened compliance procedures in foreign transfer operations. The central bank's currency auction mechanisms and oversight of international transactions play a crucial role in maintaining this balance. For ordinary Iraqis, the exchange rate is more than a headline figure. It affects the cost of imported goods, food products, electronics, vehicles, medicines, and raw materials. A drop from 157,000 to around 154,000 dinars per $100 can ease price pressures slightly, especially in a country heavily dependent on imports. Traders who previously purchased goods at higher dollar rates may find temporary relief if the IQD downward trend continues, potentially stabilizing retail prices in local markets. However, much depends on how sustainable this exchange rate shift proves to be. In Baghdad's Al-Kifah and Al-Harithiya exchanges, which are considered primary indicators of market direction, the trading level of 154,400 dinars per $100 sets a benchmark tone. When these central exchanges adjust, smaller exchange shops across the capital often follow within hours. The selling price of 155,000 dinars and buying price of 154,000 dinars in exchange shops demonstrate a 1,000 dinar spread per $100. This spread reflects operational costs, market risk, and expected fluctuations during the trading day. In Erbil, the narrower spread between 154,150 and 154,050 dinars indicates relatively stable liquidity and possibly lower volatility during that session. The psychological component of exchange rate movements is equally important. When traders observe a drop from 157,000 to 155,400 dinars per $100, it can influence expectations. If people believe the dinar will strengthen further, they may delay dollar purchases, reducing demand temporarily and reinforcing the downward pressure on the dollar rate. Conversely, if they suspect the drop is temporary, they may rush to buy dollars at what they perceive as a favorable price, potentially reversing the trend. Regional factors also play a role. Iraq's economy is deeply linked to oil revenues, which are denominated in US dollars. When oil export revenues flow steadily into the country, they provide the central bank with foreign currency reserves necessary to support the dinar. A stable oil market can therefore strengthen confidence in the local currency. If global oil prices remain supportive, the supply of dollars within Iraq's financial system tends to remain strong, contributing to stable or declining exchange. Rates like the shift observed from 157,000 to 154,400 dinars per $100. At the same time, import demand, Cross-border trade and regional geopolitical conditions can impact currency demand. Iraq shares economic ties with neighboring countries, and fluctuations in regional currencies or trade restrictions can influence local dollar needs. If importers anticipate new regulations or payment controls, they may increase dollar purchases, in advance pushing rates higher. Conversely, streamlined banking channels and smoother transfer processes can reduce panic-driven demand, helping stabilize rates closer to 154,000 dinars per $100. The variation between Baghdad and Erbil rates is also worth noting. While Baghdad exchange shops sold the dollar at 155,000 dinars and bought it at 154,000 dinars, Erbil recorded selling at 154,150 dinars and buying at 154,050 dinars. The tighter 100 dinar spread per $100 in Erbil compared to Baghdad's 1,000 dinar retail spread may reflect different market dynamics, liquidity levels, or regulatory enforcement intensity. It could also suggest competitive pricing strategies among exchange operators in the Kurdistan region. For investors and currency watchers, consistency is key. A single session drop from 157,000 to 155,400 dinars per $100 is notable, but the real question is whether this trend continues. If the rate holds around 154,000 or declines further, it may indicate that stabilization measures are effective. If it rebounds toward 157,000 or higher, it could signal that demand pressures remain unresolved. The role of remittances and international transfers cannot be ignored. Many Iraqi families rely on funds sent from abroad, often in US dollars. Changes in exchange rates directly affect the purchasing power of these remittances. At 154,000 dinars per $100, recipients receive fewer dinars compared to 157,000 per $100. While a stronger dinar supports national currency stability, it may reduce local currency inflows for households dependent on dollar-based income. Another layer to consider is inflation. Currency depreciation typically fuels inflation by raising import costs. Conversely, appreciation or stabilization can help moderate price growth. If the dollar remains around 154,000 dinars per $100 instead of climbing back to 157,000 or beyond, import costs may stabilize, reducing upward pressure on consumer goods. However, inflation dynamics are complex and influenced by supply chains, domestic production, and government fiscal policy. Market participants also monitor central bank statements and regulatory actions. Enhanced compliance requirements for dollar transfers, stricter monitoring of suspicious transactions, and digitalization of banking processes can reduce black market activity and narrow gaps between official and parallel rates. If these measures are contributing to the drop from 157,000 to 154,400 dinars per $100, their continuation could further stabilize the market. Short-term traders may see opportunity in such volatility. A 2,600 dinar movement per $100 represents a meaningful margin in wholesale currency trading. Those who purchased dollars at 157,000 dinars per $100 in the previous session and sold at lower levels may incur losses, while those anticipating the drop could benefit. However, currency trading in Iraq remains sensitive to regulatory oversight, and informal speculation carries significant risk. Public confidence in the dinar is crucial. Sustained stability around 154,000 dinars per $100 could gradually rebuild trust, encouraging greater use of the national currency in daily transactions and savings. If citizens perceive that the dinar is strengthening or at least stabilizing, they may reduce dollar hoarding behavior, which in turn decreases pressure on the exchange rate. The structural challenge remains Iraq's dependence on oil revenues and imports. Diversifying the economy, boosting domestic production, and strengthening the banking sector would provide long-term support for the dinar beyond short-term rate adjustments. While movements from 157,000 to 154,400 dinars per $100 are important, deeper reforms determine sustainability. As the trading day unfolds, dealers in Baghdad's Al-Kifah and Al-Harithiya exchanges will continue to adjust prices based on supply and demand flows. Retail shops maintaining selling prices at 155,000 dinars and buying at 154,000 dinars per $100 may revise their boards if wholesale rates shift further. In Erbil, the narrow 100 dinar margin between 154,150 selling and 154,050 buying could either widen or tighten depending on cross-regional flows. The broader implication of Monday's lower opening is that the market responded to conditions favoring increased dollar supply or reduced demand. Whether driven by policy action, seasonal trade cycles, or improved banking efficiency, the immediate effect is a stronger dinar relative to the dollar compared to the previous session. Observers will be watching upcoming sessions closely. If rates consolidate near 154,000 dinars per $100 for several consecutive days, it may signal a period of relative calm. If volatility returns and pushes the rate back toward 157,000 or higher, it could renew concerns about structural imbalances. Ultimately, exchange rate movements like these serve as a barometer of economic confidence. The drop from 157,000 to 154,400 dinars per $100 represents more than a market statistic. It reflects the interplay of policy decisions, global oil dynamics, domestic liquidity management, and public perception. For businesses planning, imports, families managing budgets, and policymakers guiding reforms,